All right. Good evening, everyone. Welcome to the Tuesday, October 8th trade findings and adjustments presented by Hurley Investments. My name is Keeve Bybee, and let's get started. Hope you guys have been well. I hope that you were able to get last Thursday's trade findings that we had some technical difficulties on, and see some of the things we talked about and the trades we went over. Just real quick, I did want to kind of briefly go over what I talked about Thursday and how things are looking now. So we talked Thursday last week at the end of the September month, mentioning that Kevin took off those QQQ puts off a little too soon, and I could tell you I was annoyed if you heard it in my voice. Not terribly annoyed, but yeah, I loved him to keep those on for last Friday when we were having some other economic numbers coming in, and for this week, of course. If you did that or were watching or paying attention to that, you would have noticed that we had a huge update in the market on Friday. That's this one right here. Kind of a thick arrow, but you see it, the difference between that one and down here when I had linked that screenshot of this chart of the S&P 500. So we had another huge up day, couldn't stay over the 50-day, and today fell back down. Obviously, some more trade uncertainty and yada, yada, yada. But if you did listen to that one, you'd have been better off because you'd have probably on Friday gotten a better deal on QQQ 185 strike puts if you decided to do it then. But obviously we're back down a little lower on a day like today, and a nice big drop again. So that's that. We went over Baidu, June 135, leap long calls to dollar cost average that position. Let me just take this guy off. We've talked about this. Obviously, I'm going to say keep those QQQ puts on if you did put those on. Just hold on to them. One day I would have looked stupid on Friday, and of course today I would have looked like a genius. So that's just kind of par for the course as far as our current market, and it's just a volatile time. So yeah, again, could be considered smart to just hold on to those. Baidu, 135. So let's go and plug that in real quick. I'm going to say if you had done a limit order, you wouldn't have gotten filled because we didn't get filled to dollar cost average that position. And I would say now that we're breaking under 100 today, to go ahead and just take them off any limit order you might have had, and let's see where it gets down to. Obviously we have where was this? Let me get my inspector. All the way down to 94 and change. So it's not like we can't come down a bit more and get a better price on dollar cost averaging that position, but I would say to just hold pat on that one, and let's see if the next couple days we don't see something different, and look for Kevin to talk about that probably Thursday during that trade findings class. So we've got that one. I did talk about how we'd wanted to see it stay over the 50-day, and if you kind of see that was Thursday. Then we had Friday, still couldn't get over it. Monday came down quite big and opened and lower today and flat right here. So let's just be patient. So we've got that one. So what do I want to talk about today? I just kind of wanted to go over a couple ideas, and really anything I just want to say with the caveat today, let's just be patient, and positions that I'm gonna suggest here to add, I would wait until the next up day that we see, just so we see some volatility come down and have some cheaper prices on options. So the first one I was looking at was a target covered call. Getting to target. They've had good sales numbers. They're kind of been flat trading in this range you see between 105 and 110. Towards the middle of November, we're going to see their earnings, which we'd want to be out by then. But you could also, at that point, kind of look at maybe doing an earnings play. Obviously, seeing jumps like this would be pretty cool. And heading into the end of the year, we could continue on and see if we can't ride that Christmas rally as well. Obviously, that would be another discussion for another day closer to mid-November or beginning of November. And I think they do like a 2% dividend, which is another thing that we could talk about towards that time. But for now, I'm really just kind of wanting to look at, let's see what we can do with target. Again, a covered call, banking on a little more sideways movement. Calls are, I would go around 110. That's our resistance level. 31 days. I kind of want to see closer. Let's check out October 25th for 17 days, and we still get $1.80 on a 110 strike, and we'll get tons of bleed off, more so from that than we would 31 days, though that's not the worst thing to look at in the world. But my suggestion, excuse me, would be to go a little closer, since we do have quite a nice bit of credit there for $1.80-ish right this evening, and trading at 108.52 would give you about $1.48 of upside, plus another $1.80. What is that? Some of you have already got it done in your head because you're smart. 328. So there, we're looking at about 328 if it heads up and we get capped there at 110. Potential profit, which is 328 divided by 108.52. It's 3%. Not bad for 17 days. We do have a 105 support level in case it goes down. But that's really all I'm looking at. Has been able to kind of hold on to this range through a period of more volatility. So makes me a little more comfortable, and that is one I'm going to suggest. So covered call, we decided October 25th, so the 25th for 17 days, 25th, and 110 strike calls. With stock. Obviously. And we're going to get about, what was it, $1.82, $1.80-ish of credit. Let me see if I can write this a little better. We'll call it $1.80. So stock around 108.50-ish, we'll say, because obviously we'll probably change a bit tomorrow. Just kind of showing you the math, obviously. Minus 180 credit. Well, I was going to show the cost basis, but that's not really important, right? For that, obviously, we're going to have to pay for the stock, but adding up the $1.50-ish of where we're buying to where the stock is going to be capped at for our covered call at 110, 180. So we're looking at excuse me, getting texts while I'm trying to talk to you guys. 330. Potential profit, or well, it was about 3%. All right, so what else do I want to look at? We do need to see while I'm thinking about it, was there any questions so far about that? Target covered call, October 25th, 110 strike for about $1.80. plus the 150 of potential profit between 108.50 and 110 gives us about 330 or about 3% profit, guys. One question was, how many shares would you want to do? Again, that's going to be subjective. So as many as you feel comfortable without putting too much at risk. I know that's vague, but let's say 100 shares is going to be 10 grand, a little over. And so for a smaller account, 30, 50 grand, that's going to be plenty to be putting at risk. So go with 100. That's probably where I'd look at that. And any other questions while I'm looking at Ford? So just to take a look at our account here. So our cost base is around 75 cents. Trying to remember off the top of my head, but I believe we dollar cost average those. We could, they're worth about 5. Let's see, what are they worth? They're not worth 5. They're worth, oh, duh, 47. So let's take a look at the chart for Ford. And actually, before we do that, we should probably get this chart over. Put it in there. That's our target. I'll go all the way down here for Ford. Ford's fallen. Kevin's talked a bit about it, but you'd figure with all of the trouble happening over at GM, someone at some point is going to think, oh, maybe Ford's a better idea. Maybe we should invest in Ford. And I think we're going to get a pop at some point, heading back up to probably test obviously that $9 price again there, the 200-day. Getting super close to the death cross that we affectionately call that 50, crossing over the 200. But for heaven's sake, you've heard us talk about Ford. I'm not going to go into it all again, but this is a good opportunity in my mind to dollar cost average our leap long call position where we have 20. We have 75-cent cost basis. I already said that. And looking to get more at 47-ish cents, probably, hopefully closer to 45 cents, I would hope. Let's see where it goes, but so they are $10, 10 strike, excuse me, January 21. I already said that. $10 strike for about, I'm just going to do this, about 45 cents. And you're going to be looking to double the amount you already have. So since we have 20, we're going to look at doubling those with another 20 to further lower your cost basis. $8.50, I believe, is where it bounced a couple back earlier in the year. So we're doubling the amount we already have. All right. So 20 more contracts. Just to do a little math, let's see, we've got 75 cents. $75 times 2,000, because 20 contracts is going to be 2,000 shares equivalent. That puts us at about 1,500 cost basis. And adding another at a 45-cent cost basis, total dollar figure is going to be, if we go around 45 cents, obviously it's quoting us at 47, but you know, I'm going to hope to see it come down a bit and just give you the rough estimates, because obviously things change. 45 cents times another 2,000 shares, or 20 contracts, going to be 900. So plus 900. We don't need an E in there. Is going to be total cost basis, or excuse me, total, that's not your cost basis, total money spent, going to be 2,400, and divide that by going to be 4,000. We'll bring our cost basis down to 60 cents. So we're moving our cost basis down from 75 down to 60. And that certainly will help. looking more of it as a support level at 850. Normally when we're doing these dollar cost averaging long call, leap long call positions, we're wanting to see before we add double the amount. We want to kind of see it lose half the value in the contracts we already have. That way we're lowering our cost basis by a half, and when we double up. So that's normally the thinking, but right now we're just looking at the price level, seeing that as a support level, and wanting to get a cheaper cost basis when it heads back up so that we can pull those 20 contracts off when it gets closer to 9 and just play that support and resistance level. So I will add that on. And there we go. Any questions, guys? I hope it's straightforward and clear because I'm not seeing any questions come over. But again, target covered call, 110 strike. We got a 3% potential profit, about 1.5% of protection, a support level at 105. And we have a forward dollar cost averaging our leap long calls that we already have that are at January 21, $10 strike for 45 cents. We're doubling the amount for us as 20 contracts. We already have 20, doubling at 20, and lowering our cost basis another 15 cents. So there you go. Guys, any questions at all? I think it's pretty straightforward. You've been through these before. Makes a lot of sense. Again, I'm going to say rather, I'll put this up at the top just so I'm more confident that people see it. Oh no, don't want that. There we go. So look at putting today's suggestions on these trades on the next up day. But not before. Since these are, so I mean, for the target one, you could look at tomorrow. Obviously, you want a little more volatility crush and higher volatility, giving us a little more credit in that short call portion of the covered call. But as a security measure, I would just kind of look at seeing where things are at when we get the next up day. All right, that's all I have for you today. Guys, thanks for joining me. Checking for any last questions. It looks like we're good. And there you go. I will get this off and you'll be able to see it hopefully tonight or earlier tomorrow. Thanks, guys. Have a wonderful Tuesday night. Good night.